Okay, 16 points lower on the Nifty, 10,475 is where we're at. Keep your eyes on PSU banks, PNB, still at about 101, 102 odd rupees or so. Oil marketing was a pack which was starting to move before we took that break. Manisha is now here with us with a roundup of what's happening in commodity and currencies, and we are focusing on oil today. Manisha, morning.
Well, yes, thank you so much for that, Prashant. It has been quite a volatile range that the crude oil prices have made for the month of Feb, from 71 on the higher side to 66 on the lower side as well. And we seem to be holding on the lower side of the range right now. So 66 actually have been broken as we start the month of March. The pressure on the crude oil prices really comes in from the fact that you have seen a lot of strength come back in for the US dollar, which is up by 2% for the month of Feb now. And apart from that, there has been, for the last couple of weeks, a constant build-up in case of the crude inventories, whether it is for crude or whether it's for gasoline and other couple of energy products as well. Apart from that, the markets, of course, are taking in strength from the fact that the OPEC output in the Feb has declined to a 10-month lows of 32.28 million barrels per day. OPEC compliance to the agreement stands at 149% for the month of Feb, which is quite strong. But even with this, the kind of supplies that we are seeing coming in from US in sense of their production is what is weighing on to the prices. On your screens, as you can see, we are trading below 65 for the Brent prices. And these markets, of course, would now want to watch out for the US non-farm payroll data that releases tomorrow. Further direction would come in from there. Prathamesh Malya now joins us to talk more about the strategies therein. Prathamesh, hi. How do you look at the crude oil prices? A very wide range is what we've seen for the month of Feb. As we start the month of March, how are you trading it today and what range are you working with?
Good morning, Manisha. Yes, as far as WTI crude is concerned, I think 64 on the upside and 58 on the lower side is the range that you can play. But as far as near-term momentum goes, I think I would play for a moment of $2 from here on, which is close to around 80 to 90 rupees move on the MCX, and hence I would be buying at 4,000 levels, which is at current market price for crude, and the contract would be marched for target higher towards 4,080, and the stop would be around 3,950. But then yes, OPEC is really doing its bit to do whatever it can to bring up the price, but then the inventories is something in the US which is rising for the past 2 weeks. Is really a cause of concern for US markets. I think it would be still on the higher levels, but then it would be a range play of 58 on the lower side and 64 on the higher side.
All right. So that's the range, of course, for the crude oil prices. How would you look at the industrial metals? Because all the data that has come in this week has not been so great, whether it is the China numbers or whether it's the US production data, the Japan numbers that we saw also coming in. Everything is, below the street estimates. That, of course, hasn't augured so well for the base metal prices. How do you see the prices move on from here?
I think base metals really had a good time so far, even in 2017 and 2018 has been quite well. But taking into consideration the set of economic indicators, which is really not faring well for industrial metals, I think I would be seller on all the metals that's been there. You can sell copper for lower target towards around 449, 440 mark. You can sell nickel 870 followed by 850. I wouldn't be a buyer in metals at least for a week from now onwards. The pressure is building on all the metals now, so I would be seller on all the metals.
Okay, all right, Manisha, as well as Prathamesh, thanks very much for joining in and taking us through all of those strategies. Just want to point out that